The Federal Reserve will have their first meeting of the year this week and will make an announcement on Wednesday with regards to their monetary policy. In this video, we will look at some of the projections for what the Fed is most likely to do, not just in this meeting, but in 2025. We'll also look at some CPI inflation numbers and see what all of this means for the real estate industry. Before we dive into what the experts believe the Fed is going to do, let's look at the CPI, the Consumer Price Index numbers from last month. So year over year, CPI for all items came in at 2.9%. And as you can see, it's been rising since hitting 2.4% in September, the lowest it's been since February of 2021. Core CPI, on the other hand, which takes out the volatile food and energy prices, came in at 3.2% year over year, which is down from 3.3% in November 2024. So we can see that inflation is still a little sticky. Now, last July, Chair Powell said reducing policy restraint too soon or too much could stall or even reverse the progress we have seen on inflation. So the question is, was the Fed a little too ambitious in lowering the Fed funds rate last quarter? We can actually get an idea of what the Fed sentiment is by looking at the summary of economic projections. As the name suggests, this is a quarterly estimate of where the FOMC participants, the Federal Reserve Board governors, and the bank presidents think the economy is headed. The best visual representation for this is what's known as the dot plot. So let's compare the December dot plot with the one from the September SEP. So these are basically assessments of the FOMC participants, with each dot representing the projection of an individual participant of the midpoint of the target range for the Fed funds rate. So if you look at December's projection for 2025, the majority of the FOMC participants indicated there would only be 2 quarter-point rate cuts this year. And that's down from the September projection of 4 quarter-point rate cuts. As you can see, the median for the longer run projection is also higher. According to the CME Fed Watch tool, there's a 97.3% chance that the Fed funds rate will not change this week, with the current target rate being in the 4.25 to 4.5 range. In fact, there's a 68.1% chance the Fed will keep the rate steady even after their March meeting. But we'll know for sure after seeing more inflation and jobs data over the next 2 months. But what does this mean for real estate? As I've mentioned before, the mortgage interest rate is not directly tied to the Fed funds rate. In fact, we saw mortgage rates that had initially come down in anticipation of the Fed lowering rates in Q4 actually went back up after the Fed lowered their rates. The average 30-year fixed mortgage rate was 6.11% on September 11, 1 week before the Fed first began lowering rates. However, as of January 16th, the average rate was back up to 7.11%. In spite of the higher mortgage rates, existing home sales last month were up 2.2% month over month and 9.3% year over year. The median home price was up 6% year over year, and it's still a seller's market with 3.3 months of supply, indicating that there are still enough buyers in the market regardless of interest rate. So the bottom line is that the real estate industry still remains resilient in spite of higher mortgage rates. If you are renting a home and waiting for rates to drop before you buy, you may be missing out on the opportunity to build equity. Now, every situation is different, and there are a lot of variables involved, especially if you already own a home and you need to sell before you can buy. If you are considering buying a home, reach out to me and we can look at your specific scenario to see if it's better to buy now or wait a little longer. I would love to help you build a custom roadmap to help you accomplish your real estate goals. If you have questions about any of this or anything mortgage or real estate related, feel free to message me. Also, like this video, subscribe to this channel, and hit that bell to be notified of other educational content. And share this video with someone that you know would benefit from this information. Thanks for watching. Have a great day.